So for here for property plan and equipment, we say we're gonna bring this level when we are done with the supporting schedules, the total property plan and equipment balance. And then for the operating leases, we're gonna be bringing this later on where we are done with Amazon's operating lease. So we're gonna be bringing that total operating lease balance here when we are done with the supporting schedules for operating leases. And from the liability side of things, the long-term lease liabilities, we're going to be bringing in this number when we are done with projecting Amazon's finance lease liabilities and Amazon's operating lease liabilities. So we're going to be bringing in those two amounts from those two different schedules. And also for Amazon's long-term debt, we're going to be bringing in Amazon's total long-term debt balance when we are done with projecting the total long-term debt balance on the supporting schedules for the long-term debt. And also for the equity and shareholder side of things, we have for the stock equity, we have here the common shares which might be issued. So here we gonna be bringing in that number later on when we are done with Amazon's funding shortfall on Amazon's long-term debt schedule. So we're gonna be bringing in that number on if there is any funding shortfall, then we would know if Amazon will be raising any equity as a result of that. Then we will bring in that number, that amount when we are done with the equity schedule. So we have that in place now. So that will be kicking in later on when we are done verifying if Amazon in case would require any funding to finance its activities. And for the treasury stock, we believe that this is going to remain flat, so this is going to be equal to the prior period. So we have that in place. And then for the additional paid-in capital, as we said a while ago, this is going to be based on Amazon stock-based compensation. So we believe that it's going to be based on Amazon stock-based compensation. So additional paid-in capital in this case, we set it to be equal to the prior period plus any increase or decrease in share capital. So in this case, we have Amazon stock-based compensation. So we have that in place now. And then for other accumulated other comprehensive loss, this is also gonna remain flat. And for return earnings, it's gonna be a similar formula to the additional paid-in capital. In this case, we'll take the prior period's return earnings, we add net income that will be generated in that period. So we add the net income that will be generated in that period. And then we can take out any dividends, if there will be any dividends that should be paid in that period, even though we know that Amazon at this point in time is not raising capital by issuing shares. However, we just place that assumption should in case. So we have that set up here. So we can now fill all of these right to the end of the projected period. with Control R. So any additional paid in capitals can be based on the prior period plus any stock-based compensation, which Amazon had as a function of its operating expenses. So and then we had the retained earnings, which is the prior period plus any income generated in that period, and then we deduct any dividends that should be paid in that period. So we made the dividends a negative number, a positive number, even though we know that any item which is negative is going to be negative on our cash flow statement. However, we know that Amazon is not paying any dividends because they are not issuing any stock. They are not raising any capital by issuing stocks at this point in time. So we have that in place. And since it's a high growth company, they pay little or no dividends, or they don't pay dividends at all, even when they're being issued stocks, even when they do issue stocks. So having that set up, we can also fill the cash and cash equivalents opening balance to the end of the projected period here. It's Control R. So as you can see for now, we have some few items left that we have to fill in our financial statements for Amazon. So in order to do that, we will have to construct a comprehensive supporting schedule